Happy Friday. Welcome back to Stock Market Weekly. It was a pretty eventful week. We survived Micron earnings. There was a good amount of volatility out there, though, across Mag 7, semiconductors. It feels like people are focusing on the Mag 7 weakness. For those of you who have been tuning in, we have been talking about this now for the past few weeks, so it's not a new concept, but we're going to hit on that. We're going to talk about semiconductors. We're going to talk about biotech, which is still strong, and then we're going to look at some AI selected trade ideas, which we'll talk more about in a little bit. So let's get into it here. We're going to kick things off with, of course, Micron. So Micron, everybody was hanging on basically the company's view into the future here on demand, and they didn't disappoint, and I don't think anybody expected them to. The numbers were blowout, and we did see the stock immediately surge. Now they sort of sold off into the event. We had a little bit of a rattling going into the event, then they popped, and then they kind of rolled over a bit on Friday. But numbers were staggering, and we saw, of course, the stock briefly hit new highs, and then again, we trailed off a bit on Friday. This view here that you're looking at with this exit zone and our entry, this is quant rockets. So we have been white knuckling a hold here in Micron since April 10th. So our entry point was right in here. As momentum started to pick up, we have hit all 5 of our targets. So if you're doing a target tier kind of exit plan, then you're holding maybe a third of the position roughly right now. So a bit of a runner. But so risk has been reduced naturally, and our current exit zone is 948. I always say it whenever I present something like this, but you got to give these stocks room to breathe. If you want to capture 168% return in a month or two, you have to give the stocks enough room to move. Otherwise, you're going to be out on every little dip like this, like this, like this. So again, this is more trading architecture that I don't necessarily want to get into here, but this is the way we're kind of mapping things out. We're long. Stop right now is about 950, and that'll continue to move. Now, semiconductors this week is going to be one of the things we'll be talking about, because take a look at this. This is a weekly time frame, and we have a weekly bearish engulfing bar. Now, it's been tough to get a lot of follow through selling. In fact, in semiconductors, this is now the 3rd red week. So we had 1, we had 2, and we had 3. Each time we saw kind of a bearish week, there was no follow through. That was the low. And so we will ask the question, is this a buying opportunity? Is this continuation higher in the trend? We're going to look at that in the second half of this video. Now, speaking of not quite semis, but a consumer of semis, Apple suffered one of its worst days this week when it announced I think 20% price hike, citing directly the input costs of memory. And if we take a look at Apple here, I posted this chart on social. This was the daily returns of it right down here, about 6%. So this was, if you just look left, okay, so this is just showing you kind of what the magnitude of the sell-off was. And I can't really draw a straight line easy, but it was basically the tariffs when we've seen Apple suffer a worse down session than we did after announcing those price hikes. So we'll look at that chart in a little bit. I think this is interesting. I don't know who to attribute this to, because I saw this floating around a few different spots. So basically just stealing Bloomberg data here, but thanks to all those that shared it. This is quarterly free cash flows looking at Amazon, Google, Meta, Microsoft, Oracle. And if you take a look at these free cash flows that these companies have been generating over the last decade, it has been monstrous, of course, right? And very shareholder friendly. And now look where we are now. We are in the negative. So we are negative 60,000 in millions, so billions. So $60 billion of negative free cash flow because of so much investment right into Micron, NVIDIA, and all these other sort of chip companies. And so people are waking up now, of course, to the amount of spend that is going on right now. Now, again, if you've been tuning in here, this is our market navigator screen, specifically looking at Amazon. We track all the Mag 7. We'll throw SpaceX in there once there's enough data, but we have had sell signals on the Mag 7 for the start of this month. They all started to trickle through. So this weakness is not new. I saw a lot more people talking about the weakness in the Mag 7 towards the end of this week, which probably means we're at some type of bottom at this point or some type of bounce point. So I don't know that I would be pressing any shorts here in the Mag 7. They had a pretty good collective decline. Again, the Mag 7 are so different. So each company is its own little universe that you need to comb through. But at this point, maybe there's a little bit of a bounce and maybe some of these actually start to turn up. For now, we'll look a little bit later in our dashboard. I think they're all still negative. If we take a look at SpaceX, I know this chart is a little compressed here as a weekly. So week 1 of SpaceX, everybody's happy. Week 2, got some nice momentum. And week 3, coming back down to reality. Again, treat this like a Mag 7, call it the Mag 8. We're basically back to 150. Again, I don't know that it's a big loss or anything super negative here. I think it's still trading pretty reasonable and at a pretty hefty valuation, at least at the time of recording this. Now, biotech, we talked about biotech last week. This is something that is not fading. In fact, there's still a stampede rush and rotation right into biotech. XBI, seeing just consecutive up days, and take a look at the volume that's coming through on the right hand side. Now, the other chart that I think is interesting to show is Russell 2000. So this is the IWM relative to the S&P 500. So basically just a relative strength chart. And you can see that this has been in a multi-year downtrend. And that was, of course, until the start of this year. We did share this chart, talked about it briefly, I think, right in here towards the beginning of this year. And it sort of just chopped around, and now it's starting to really kind of leg up and make another push. So Russell 2000, breadth expansion, another chart I posted, which is not in this deck, was basically, be careful what you wish for if you want breadth to expand. I don't know that breadth expansion is necessarily better. I don't know if that's the right word to use. It's not. I wouldn't call it, it's healthier from a trader standpoint. As a trader, I like broad breadth, but from a market perspective, like we look at this week, the indexes were down pretty sharply. So it's just one of those be careful what you wish for type of things, because we do have broad participation now, but it is at the expense, here we go, at the market performance this week. The Qs were down 4.5%. The SPY was down 2.25%. So, I mean, are you happy that we had broad participation? It depends where you were. If you were not in the Mag 7 and you were in biotech, you were in some of these other rotation plays, some select financials, some select real estate, these things were doing well. All right, let's take a quick pit stop. Our sponsor, Investors Business Daily. We've got links in the description of this episode. Market Surge, IBD Digital, we've got discounts to both. Use the links in the description of this video. Check out both tools, pretty inexpensive for the IBD Digital. Get some good ideas. They're classic IBD 50, and Market Surge, great charting platform here for all of us to use. Thank you, IBD. Now, let's talk about the SPY this week. It was basically a cliff drop to start, and then more selling across. So the SPY here has really developed kind of an ugly, sideways, very volatile trading range. I want to talk about this in the second half when we dissect this price action, because ranges have expanded here. We do want to take note of that. Realized volatility is up. The VIX is up in the high teens, so not anything dramatic, but it's certainly in a slightly more elevated regime. Dollar index was very strong. This is a bit of a relief valve this week, putting a lot of pressure on commodities and, just tightness all around, I would say. 10-year treasury, though, is not. The yield situation in the middle of the curve, this 10-year picture, is actually improving, and that is notable. We're down at 4.37, so we are kind of unwinding a little bit of that stress that was building up coming into the month. Sector performance this week, take a look at this. This is healthcare, up 8%, just a huge rotation. We're going to spend some time looking at that. Real estate, utilities, staples. Again, let me just say this again. Healthcare, utilities, staples. Those are not the three you want to see at the top of your relative strength list, generally speaking. Now, breadth is improving. Again, this is where we have to, breadth, it's improving, but it's also expanding in both directions. So the number of stocks hitting 52-week highs is starting to now pick up on a new kind of floor. We're up around 150, 200 stocks per day. That's the highest we've seen now in quite some time that are working themselves up. But what you will notice on the right-hand side is you are starting to get an uptick here in the number of stocks hitting 52-week lows. Dispersion just at its finest here. It is moving from that cap weighted, everything's just, being moved up by the Mag 7 and some select semiconductors, and moving more to that broadening. Percentage of stocks still holding up. Put to call ratio, well, this was coming into Friday, but I can't imagine it improved that much. So there's definitely some stress out there right now. And Bitcoin is still doing Bitcoin things, dancing around 60K. It's hugging it. I mean, it feels like you're either going to rip back up here in very short order to 68, or you are going to capitulate down to 55, 54. There's a move that's coming, but everybody's dancing around the 60K right now. We'll see what the weekend trade brings, but still not a whole lot of relief here for Bitcoin traders. All right, so let's get into some charts here in the second half of this video. All right, let's resume some things here with our Market Navigator. So this is our membership here that tracks the health of the market environment. And so going into the weekend here, you can see that we are now moved up to a 55-day streak in the bullish swing trading environment. So this is getting longer in the tooth for sure, right? We talked about that a bit last week. As you start to climb over 50 days, you're getting into an aging swing environment that usually needs a little bit of relief at some point in the near future. Again, it's not a sell signal. I want to stress that. It is still a glass half full scenario. We just want to be data aware of where we are kind of in the cycle. We're on the ending of the cycle would be mid to late stage of this swing cycle is the way I would think about it. Now, importantly though, the Mag 7 weakness did not derail the market environment, not yet anyway. If we scroll down again, you can see since April the 10th, our models have been saying that it is good to be out there taking swing risks to the upside, and we've been rewarded for that. Now it's getting a little more dicey, so we'll see if we can survive another week. If we look at the Mag 7 here, like we talked about at the top of the video, these downtrends are not new, so they're all in some sense mature as well. The tension that we've been thinking about the last 2 weeks is the Mag 7 going to bring the rest of the market down? And we did see signs of that this week. The Qs and the SPY, they were heavy this week. So they are bringing things down. The semis started to roll over this week too. And that's going to be where the rubber meets the road next week is, can semiconductors stay firm? We're going to look at the price action here in just a little bit. If we go back to sectors though, we did get a sell signal in consumer discretionary on Friday. So that sector, we kind of lost it. Now we only have 8 here that are bullish. The top though, that at the top of the list now is healthcare. So it's our top ranking. So that's been, a good rocket ship there to the upside. But in terms of sectors here, that's kind of what we're looking at. Breadth is still good. Bullish internals, strong industry participation, still broad sector leadership. So the way we're looking at things is it's still glass half full, but we want to see if this can hold up another week. We want to see if that semiconductor leadership can hold us up. Now, we're going to look at some price action, but here's what I want to do. A little bit of a fun live exercise that I did not test ahead of time. So I have no idea what the result's going to be. This week, we had a launch of our trade risk AI connector, basically an MCP server that members now can tie in Claude, ChatGPT, Cursor, whatever's MCP enabled to interact with all of our trading systems, signals, our data, our research platform. And there's a lot of cool things you can do with it, right? When you start to think about those use cases. So here's what I want to do. I did not run this test prior, but I wrote up this prompt instructing, this is ChatGPT 5.5, to pull the latest quant rocket positions, then go do a web search for news, catalysts, earnings updates, sector trends, all the good stuff, and cross-reference everything that it finds against our current quant rocket positions. And then I want it to return 3 stocks that we will look through that it feels is best positioned to work next week. All right. So little fun experiment. Let's send out the prompt, and this is probably going to take a minute. And so I'm going to continue here, and we'll see what it comes up with at the end of the video. We're going to review those stocks. We'll look at how we're trading them. So it's going to start by pulling the live Quant Rockets list, and then it's probably going to go out and do some other fun stuff, and maybe it'll break. Who knows? Okay, so let's look at some charts. Let's look at some price action here. S&P 500. This looks sloppy. It's gone sideways. It hasn't done a whole lot. Ranges have expanded, and it obviously is coming off of a big multi-month run, April, May, off of those initial wartime sort of lows. So the S&P 500 is kind of in no man's land, trading, volatile, sideways, and we are waiting for some direction out of this range. I think it can just be as simple as that. It's going to chop traders up. We're moving into summertime. Volumes are going to get lighter. We do have earnings season also coming up. But this is kind of where we are right now in this messy sideways range. Keep it simple, 7,250 on the downside, 7,600. That's what I'll be paying attention to. Also, I'm going to be paying attention to our market environment health. If that starts to break down, especially before this breaks down, then I'm going to assume we're breaking down, right? Like that's the way I'm going to look at this market. The Qs, it's very similar here. It hasn't gone anywhere. It's chopping around. Realized volatility has expanded. And what I mean by that is look at the bars here. Look at the range that we saw in these bars here in April and May. Look at the bars we're seeing over the last 2, 3, 4 weeks. 3x bigger. So there's movement happening, there's rotation, there's dispersion, there is a lot of different things happening here underneath the hood. And so we just want to be aware of it. It could turn into a innocent sort of continuation pattern, or it could be a more ugly sort of topping pattern that we break down from. But in either scenario, the ranges are pretty clear here, 690 to call it 740. What doesn't look like that is Russell 2000. What doesn't look like that, the huge ranges in the last 2 weeks, you don't really see that in the Russell 2000. It's more smooth, it's orderly, it's working. So this is where, we have more, just more consistency here. It looks like Codex is done with its little report, so we'll look at that in just a little bit. Okay, so, Qs down 4.6%. One of the worst weeks that we've seen since back here, in this immediate sell-off. Notably, we were down 4.5% coming into June. So once again, we're kind of slamming down on the market here, and that's what we're kind of waiting for. VIX, VIX here on SIBO. 18.5. We sort of already talked about it, so not too much else to say there. Let's move to some of the more interesting spots. So XLV leadership here. Take a look at this weekly chart. One of the best weeks for healthcare in quite a long time, closing at weekly all-time highs. Big volume coming in. There are lots of big winners. Eli Lilly, probably one of the biggest though, and I believe it has the biggest weight in the XLV. So this was up 7% on Friday, new all-time highs. That's going to help drag everything else up there in that sector. XLU, right? Weekly chart, 3% up. That's a big move. And then Staples, 1.69%. All very boring, but they were working. And of course, XBI. I mean, take a look at this. It's up 10%. So this we talked about last week as a breakout week. Shared some charts online on this. So some good follow through here. And hopefully people were able to take advantage of that. Let's look at IGV because this was ugly minus Friday. IGV retraced a good amount of its run higher. It's in a 20% slide lower since the peak here coming into June. You could look at Oracle, which did not enjoy a Friday bounce. This is really selling off pretty aggressively again. It's exactly what you don't want to see. volume hasn't been that high, but you just don't want to see a move, really give back all of this. So if you throw on a weekly chart here, I mean, it almost feels like you have to come back down and test these lows again around 130, and we'll see what happens. But Oracle, stretched in the short term, can easily bounce, but it's in sort of a painful state. Look at something like Palantir. This also suffered this week. This was down 12%, and it did break down. We posted this, excuse me, this chart on X, and we did get a breakdown here of this range. We are sliding lower. It's been in, a decline here for quite some time, about a 48% pullback. I think you still have to be careful here. Obviously, forward price to sales, price to earnings, whatever you want to look at is more attractive now than it ever has been, but it's still a very expensive company. I still wouldn't be surprised to see us, trade double digits on this. Probably going to be a great buy here at some point for a longer term hold. I just don't know that it's now, and am not that interested in trying to pick a bottom there. Another place unwind happened this week was space. This is, again, just more speculative kind of corners, or maybe retail focused corners, but UFO, just using it as a proxy generally, 30% decline. You can look at something like Rocket Lab, which has also pulled back pretty aggressively. So there were definitely unwinds happening this week. If we take a look at SpaceX, this is the chart. It's not so pretty. What I would look at for SpaceX traders now is just the volume weighted average price. So just throw a VWAP on anchored VWAP or VWAP from the first trading session on Friday the 12th, and use that as your benchmark if you're trying to trade this. We're below it. The average buyer now in the secondary market is underwater, 175. If we can start breaking above there, then maybe you get a nice good shot to push back up towards those highs. For now, you do have a range developing here, and you do have some index buys coming through. You don't have any lockups yet coming onto market, but it's not all that attractive. I did have a trade in this at one point, but didn't materialize or didn't hold on to it for any period of time. What else do we have? IGV we talked about, space we talked about, semis. Yes, so one of the most important areas of the market next week is going to be semiconductors. So semis printed a bearish engulfing bar on almost the heaviest volume that it's ever seen. That's SMH. Let's take a look at SOX. Kind of the same thing, right? Two different ways to weight and position semiconductors, but you got bearish engulfing weekly bars in both. Let's go down to a daily chart. Look, it can save itself. I think this is the spot you want to see it save itself, right around 600 or above. If we can contain this pullback to just this, then we can survive and fight another day and continue to trend. I think if you start violating 600, then you're going to just have to naturally want to come back down and retest the lows from the beginning of the month, which would be around 550. Then you're going to start to break trends. Then you start to create more breakdowns, and it just gets a little more dicey. So I think semiconductors, right? Same thing with MU. There's a little bit of a gap to fill here. I'm still surprised it never filled this gap back here, but I think you just need to keep things held up. As these trends develop and you get more and more stretched, from long-term moving averages or above a Bollinger Band or whatever your measurement of stretched is. There's plenty of ways to calculate it. You need to keep the music playing, and you don't want to see the breach of that support when you start, rolling over, because then everybody wants to rush for the exit door and the positioning, and, it just gets slippery fast. Not saying the end of this is from a secular perspective is here, but for a 25% correction, why not? I mean, I know it sounds naive to say it like that, but I mean, a 25% correction gets you down into about the 500s, which would still be well above the highs here from the breakout, would certainly shake the tree a bit, and, would set up a nice higher floor. Again, that's one day at a time. Let's see how it plays out next week. I think this is your focus point. Mag 7 lost leadership. You need to see the semis now maintain leadership if you really want to keep this market trading in a sideways range. All right. So I think that's all I have to say on the major market. Let's take a look. Let's take a look at what our AI has come up with. So Rocket's data is current as of Friday, June 26th. So this reflects today's close. Market Navigator is also supportive. Okay, great. Overall state is strong. Great. Healthcare ranks 1. Industrials. Okay, so it's fetched all of our information. Top 3 for next week. GLW. Okay, so GLW. Let's take a look at it, and then let's look at the reasons why it picked GLW. So all of these have buy signals from us. So our model likes all of these. So in some sense, they're all winners in my book, but GLW is one that we just got involved in. And that looks like best fresh setup catalyst combo, newly bullish in rockets, tied to an active AI bottleneck theme and in an industry ranked 10 by Market Navigator over the past 1 month. And it is less extended than many AI hardware peers in Rocket's book. All right, so I like it. Again, we just bought it, broke out to new highs. I think it's reasonable. You can see where our exit zone currently is, around 185. So yeah, I think that's pretty. Spot on. NTRA. So this is its number 2 pick. Let's take a look at NTRA. This is one I think I shared yesterday. Last week, which was a good prior week to get involved in. So let's see what this says. So bullish, Japan approved. Okay, so it's finding some catalysts here on the fundamental side of things, which is not something that I would technically do as a technical trader or as a quantitative trader. That's why I like the AI intelligence overlay here. Strongest sector backdrop. Okay, so it's picking up. Healthcare is Market Navigator's number 1 sector. Biotech is top 15. Catalyst is fresh. Great. I like it. Here's how we're trading it. We entered at 215, exits at 225. So that's it. And oh boy, so number 3, its pick is Micron. Blowout earnings and guidance driven by AI memory demand. All the things we sort of talked about. Fresh earnings revisions can keep institutional demand alive into next week. And the story is spread to the whole memory storage complex, unlike a pure chart only pick. MU has clear fundamental catalysts. The downside is it's very extended. Next target. Okay, so all the things we already know, but I think this is pretty nice. This is a very small sample of kind of the overlay or the intelligence that you can now pull from our quantitative systems, whether it be Galahad, Market Navigator, or Quant Rockets, and overlay it with other analysts or criteria or fundamental research or earnings call transcripts. I think it's pretty cool. So subscribers now have access to an AI connector. This is a membership upgrade, but it is available and you can do lots of cool things, which I'll be showing more of hopefully on the YouTube channel as well. So that's it. You got some trade ideas there, kind of curated by AI, but obviously grounded in our quantitative work. You've got the themes to look at for next week. Semiconductors, holding that technical support. I think that's going to be important. And then we'll see if that market state can hold up for the 60th day. That's what I got. Check out the links in the description of this video. Have yourself a great weekend. We'll see you back here on Thursday for the short week of 4th of July. Take care.